So yesterday we have completed field status variant. Today we will see tolerance groups. In the financial accounting, we have to define the tolerance groups for the following objects. Number one, GL accounts. So for the GL accounts, we have to define the tolerance groups. Then users. Users means employees in the finance and accounts department. Then vendors and customers. So at this point of time, we will see what are the tolerance groups for GL accounts and users. Then the tolerance groups for vendors and customers, we will discuss in accounts payable and account receivable respectively. So first, tolerance groups for GL accounts. So what is the tolerance groups for GL accounts? Setting the maximum limits. See, setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Again, I'm reading. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance written off account means what? So before going to explain what is this tolerance groups for GL accounts, we have to understand one more concept in SAP, open items. See, open items means pending items. So the pending items concept is applicable to vendor accounts, then customer accounts, then some balance sheet GL accounts. So open items relating to vendor accounts means pending items to vendor accounts. So what are the pending items in vendor accounts? For example, today we purchased some material from a supplier and the supplier has given 30 days credit. So today we received the material and we have entered the invoice into system. Then we post one accounting entry, debit to raw material account, credit to vendor account. Then the system will update the vendor account balance also. In addition to that, the system will display this invoice in the red color. When you post the invoice in the system also will display this invoice in the red color, meaning that it is open item. Open means pending. So this invoice is pending for payment. So when do we make the payment on this invoice? On 30th day, because vendor has given 30 days credit. So we make the payment to vendor on 30th day only. So till you make the payment to vendor on 30th day, right? The system will display this invoice in the red color. That is called open item. So this is just information provided to the user that on this invoice payment is pending. So that is called open items for vendor accounts. Then on 30th day, right, when we make the payment to vendor, right, the system will turn the red color invoice into green color. That is called cleared item. So how the open item and cleared items will appear, I will show you in the accounts paper. Then coming to customer accounts. So open items for customer accounts means today we sold some goods to a customer for 15 days credit. So we enter that sales invoice into system. Then system will debit the customer account and credit the sales account. In addition to debiting the customer account, the system will display this sales invoice in red color, meaning that it is open item. Again, meaning that that is pending for receipt. So when you have given the credit period of 15 days to the customer, when do we receive the payment? On 15th day only. That means till we receive the payment from the customer, the system will display the sales invoice in the red color, meaning that it is pending for receipt. Then when we receive the payment from the customer and when the payment is entered into system, the system will turn this green color invoice into, the system will turn this red color invoice into green color, meaning that that is cleared item. Cleared item means paid items. So How the open items and cleared items will appear in the account receivable, I will show you in the account receivable module. Then this pending item concept is also applicable to some balance sheet GL accounts. It is not applicable to all the balance sheet GL accounts. It is applicable to some of the balance sheet GL accounts. So what are those balance sheet GL accounts to which the open item management concept is applicable? Outstanding expense account, outstanding incomes account, prepaid expense account, and incomes received in advance account, right? So what is this outstanding expenses, outstanding incomes, etc.? Here, do one thing in the page number 25, put heading, accrual concept of accounting. Put heading, accrual concept of accounting. Accrual concept of accounting. Title. It is the process of accounting for all expenses. It is the process of accounting for all expenses and revenues in the month only in which they are incurred, or earned in which they are incurred or earned, even though they are not actually paid, even though they are not actually paid or received. So this is called accrual concept of accounting. Means here we maintain the books of accounts to find out the operational results periodically. So this period may be a month, maybe a quarter, maybe a half 6 months, or maybe a year. So for that purpose, we prepare the financial statements every month. So preparation of financial statements every month is not legally required, but preparation of financial statements at the end of every year is legally required. The preparation of financial statements every month is only for the information purpose of the company management, right? Because they want to know whether we are earning profits or we are incurring losses. For that, they want to prepare the P&L account and balance sheet every month. Now, if you want to find the profits every month, what we do? We compare the expense of that month with the revenues of that month only. For example, if you want to find the profits for the month of August, right? We compare the total expenditure of August with the total revenues of August. Then, normally what we do? We account for expenses and revenues only when they are paid and only when they are received, right? But there are some expenses which are incurred in the current month but paid in the next month. For example, rent. The rent of every month is paid on 1st of next month. The rent of April is paid on 1st of May. The rent of May is paid on 1st of June. Similarly, let us assume we are paying the salaries on 1st of every month. In that case, the salaries of April are paid on 1st of May. The salaries of May are paid on 1st of June, and the salaries of August are paid on 1st of September, and so on. Now, here, for the month of August, we are preparing P&L account and balance sheet, right? But the salaries and rent of August is paid on 1st of September. That means they will be accounted in the month of September only. But actually, these expenses are relating to August, but they are accounted in the month of September. In that case, if you prepare the P&L account and balance sheet for August, they are wrong. They are wrong. In that case, there is no use of preparing the financial statements for the month of August. That's why before preparing the financial statements, right, we have to post some accounting entries. Those accounting entries are called accrual entries, right? For example, we are in the June 2018. Let us assume that we are in the fiscal year 2018, right? Now, on 30th June, we are preparing the financial statements. On 30th June 2018, we are preparing the financial statements. So on this day, you have incurred rent, we have incurred salaries, and we have incurred commission, but they are not paid on this day. They are going to be paid on the 1st of July. But these expenses are related to June only. That's why they are to be accounted in the month of June only, even though they are not paid. For that, we post one accounting entry like debit rent account, 10,000, salaries account debit, 20,000, commission account debit, 5,000, to outstanding expense account, 35,000. By virtue of this entry, your rent account, salaries account, and the commission accounts are updated as on 30th June itself. As on 30th June itself. Then your P&L account will display correct picture of the profit. But did you pay these expenses? No. That's why this outstanding expense account is shown on the liability side of the balance sheet. Now, if you prepare the ledger account for the outstanding expense account, right? These three line items are posted to the credit side of outstanding expense account. By rent, 10,000. By salaries, 20,000. By commission, 5,000. So did you pay these items? No, they're pending for payment. So the system will display these three lines in red color, meaning that open items. I hope till now it's clear for everybody. Now, on 1st July 2018, right, we have paid the above expenses. In that case, debit outstanding expense account, credit cash account, rent 10,000, to again credit cash account, salaries 20,000, again credit cash account, commission 4,800 rupees. Okay. Now, total credit side is 34,800. So debit side is 34,800. Okay. Now, if you post this entry in the outstanding expense account, they are posted to debit side. To cash, rent to 10,000. To cash, salaries 20,000. To cash, commission 4,800 rupees. And these three line items are displayed in the green color, meaning that cleared items. Cleared items, right? Now, again, on 31st September, on 30th September, again, we are preparing the P&L account and balance sheet, right? In that case, you balance this outstanding expense account, right? In this outstanding expense account, total credit side is how much? 35,000, right? Then total debit side is 34,800 rupees. So credit is 35,000, debit is 34,800. So there is a credit balance of 200 rupees in the outstanding expense account. Still no clear? Now, here, whether this difference of 200 rupees is to be transferred to balance sheet as a liability or revenue in the P&L account. Where do we display this 200 rupees? In the balance sheet or P&L account? Tell me your answers, please. Somebody try to interact with me. What's your answer in this case?
If it is liability, it is on the balance sheet.
Sheet, sir.
It's a liability, right?
Yeah.
Yes, sir.
Okay. Any answer from anybody else?
Sometimes if we receive discount from.
Hi, Lakshman, can you repeat the question?
See, there is a difference of 200 rupees in this outstanding expense account. Okay.
Okay.
Now, We are preparing the P&L account and balance sheet on 30th September. In this case, whether this difference of 200 rupees is to be transferred to balance sheet or P&L account. That's
Normally,
what-
it should be transferred to balance sheet as liability.
It's a P&L account, sir.
See, all of you are correct, right? Balance sheet is also correct and P&L account is also correct. But here, whether this difference of 200 rupees is to be transferred to balance sheet or P&L account is decided by the reason for this difference. For example, the person, see, we have provided rent, so we have paid total rent, okay? And you have provided for salaries, so you paid total salaries. But you have provided commission 5,000, but you paid only 4,800. Why? What is the reason for this? See, the person to whom you have provided a commission of 5,000 rupees, he came to our office exactly at 5 p.m. right, on 1st September. So 5 p.m. is the closing hours, and already main cashier has left the office. I am the junior cashier. Then the commission agent approached me saying that, sir, you have to pay 5,000 rupees commission to me relating to previous month. Then I said, yes, you are true. You are right. But as of now, I am having only 4,800 rupees with me in the cash box. And the main cashier also has left the office because it's already 5 o'clock. Then you do one thing, you take this 4,800 rupees, then you collect remaining 200 rupees when you come next time to our office. Obviously, right? The commission agent has accepted. So he has taken 4,800 rupees. That's why I have credited cash account with 4,800 rupees. That's why there is a balance of 200 rupees still in the outstanding expense account. That means if it is a reason for this difference, still there is a liability on our part to pay this remaining 200 rupees to the commission agent when he comes next time. In that case, it's your liability, means it is displayed on the liability side of the balance sheet. Okay, another reason I will tell you. The person to whom you have provided this commission of 5,000 rupees, he said, sir, in this particular transaction, I am giving you a discount of 200 rupees. So instead of 5,000, it is enough to pay me only 4,800 rupees. That's why I paid only 4,800 rupees and I created the cash account with 4,800 rupees. That's why there is a balance of 200 rupees. If this is the reason for this difference, you need not pay later. It's your discount received. In that case, this 200 rupees is to be transferred to P&L account as revenue. I hope it's clear for everybody now. Now,
Sir, is it it's a discount on commission? We can.
obviously, this
Okay.
is the commission only,
Okay.
right? So,
Yes, sir.
in that case, it is to be transferred to P&L account. Now, if you prepare the P&L account and balance sheet manually, as an accountant, you know what is the reason for this difference. And accordingly, you will transfer it to either P&L account and balance sheet. Okay. But here, system itself automatically generates the P&L account and balance sheet. There is one button. If you press that button, right, system automatically generates the P&L account and balance sheet in SAP. But in that case, the system should know when there is a difference of, right, when the system identifies this difference of 200 rupees in the outstanding expense account, it should know whether this difference is to be transferred to P&L account or balance sheet. So how the system knows whether this is to be transferred to P&L account or balance sheet, because system does not have the brain like us. So you give the instruction to the system, right? Whether this difference of 200 rupees is to be transferred to balance sheet or P&L account through tolerance groups for GL accounts. You give the instructions to the system through tolerance groups for GL accounts, whether this difference of 200 rupees is to be transferred to P&L account or balance sheet. That's the meaning of the tolerance groups for GL accounts. See, setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit loss account or some predefined account like sundry balance return of account. Means based on the requirements of the accounts department, you define number of tolerance groups. For each tolerance group, you define upper limit, right? For example, here we define 4 tolerance groups. Tolerance group A, 150 rupees. Tolerance group B, upper limit, 100 rupees. Tolerance group C, upper limit, 200 rupees. Tolerance group D, upper limit, 250 rupees. Now, based on the requirement of the accounts department, you assign the required tolerance group in the GL account master records. You assign the required tolerance group in the GL account master record. Then the system will compare the difference in the GL account with the upper limit of the tolerance group. The system will compare the difference in the GL account with the upper limit of the tolerance group. If the difference is more than the upper limit, that will be transferred to balance sheet by the system. If the difference is equal to or less than the upper limit of the tolerance group, then that will be transferred to P&L account by the system. So let us come in the reverse way. Okay, before that, suppose for example, you have assigned tolerance group B in the outstanding expense account, right? So the difference is 200 rupees in the account. Upper limit is 250. So difference is less than upper limit. Then that will be transferred to P&L account. Suppose if you assign either A or B, the difference 200 is more than A or B upper limit. Then this 200 will be transferred to balance sheet. Now let us come in the reverse way. It is the policy of the accounts department. It is the policy of the accounts department that in any balance sheet GL account, in any balance sheet GL accounts, which are related to accruals and deferrals, if there is a balance of 200 rupees or less than 200 rupees, straight away write it up to P&L account. That is the policy of the management. In that case, you can assign either group C or group D. Clear, no? See? Let us go to another company code, right? Let us 00 1,500,000 rupees. Company code SS, sorry, 1,500,000 GL account. See, outstanding expense account, right? So here you have the tolerance group. So you assign the tolerance group here. Then the system will compare the balance in this GL account with the upper limit of the tolerance group assigned here. If the difference is more, that will be transferred to balance sheet. If the difference is less than or equal to tolerance group limit, that will be transferred to P&L account, right? Then based on the requirements of the accounting department, we define the different tolerance groups and we assign them in the respective GL account master records. Based on the limits specified in those tolerance limits, the differences in the GL account is automatically transferred to profit loss account, and the limits are applied at the account level, not for every transaction level in the GL account. Means the system will consider the difference at the total balance level, right? Not at the individual transaction level. Okay. Then a tolerance group can be assigned in any number of GL account master record, but a GL account master record can be assigned with only one tolerance group. The upper limits can be specified either for the debit differences or for the credit differences separately. We can define the upper limits either in terms of whole amounts or in terms of percentages or both. If both the terms are defined, the system will consider the lower of the two as upper limit and behaves accordingly. That means, for example, we have assigned tolerance group A, right? Upper limit we have defined 100 rupees and 1%. So you can define the upper limits both in terms of whole amounts, means 100, 150, 200, like that. They are called upper limits, right? 1%. 1% means the system will apply 1% on the total of the account. So when you specify the upper limit, both in terms of whole amounts and percentages, right? The system will consider the lower of the two as upper limit. Means 100 and 1%. 1% on total of the account. The system will apply this 1% on the total of the account, right? So 35,000, 1% means 350. Out of these two, which one is lower? 100 is the lower. So the system will consider this 100 as upper limit of the tolerance group A. Then what is the difference in the GL account? 200. So 200 is more than 100 rupees. So it will be transferred to balance sheet by the system automatically. This is the concept of tolerance groups for GL accounts. Now, while doing the step, I will explain you the other parameters relating to tolerance groups for GL accounts. Path is SPRO, means it is also the job of the consultant. And there is no difference between ECC and S4 HANA in this tolerance groups. So till now, we have done some settings, right? So the same settings are also available, and we have to do the same settings till now in S4 HANA also. There is no difference between ECC and S4 HANA in the creation of company code, right? Then business areas, consolidation business areas, chart of accounts, account groups, retained earnings account, and the field status variant. But there is little bit difference between ECC and S4 HANA in the case of posting period variant. So what is that difference? I will explain you and show you in the S4 HANA classes. So in the case of tolerance groups for GL accounts also, there is no difference between SAP ECC and also S4 HANA. So path is SPRO. Finance accounting, general ledger accounting, business transactions, open item clearing, clearing differences. See, define tolerance groups for GL accounts. Transaction code OBA0. Click on new entries. Don't write now, right? First look at the screen. I want to define the tolerance groups like A, B, C, D like this. So you can go up to 4 characters. Company code is equal to SSKV tolerance group. You can go up to 4 characters. Just like I'm giving A. Tolerance group is equal to A. Right? Then description. Upper limit 150. Debit posting 150. Credit posting 150. Normally, debit posting and credit postings are same. Click on save and enter. Then again, I want to define tolerance group B, right? Then click on next entry button. This is called next entry button. Company code SSKV. Tolerance group B, right? Then upper limit 100. Debit posting 100. Credit posting 100. Click on save. Then again, I want to define C. Click on next entry button. Like that, you can go on defining any number of tolerance groups, right? Now you write down. Company code is equal to SSKV. Now you write in the material. Please write in the material now. Company code is equal to SSKV. Tolerance group is equal to blank. Means keep that field as blank. Don't write anything there. Now, name is equal to blank tolerance group for SSKV. Name is equal to blank tolerance group for SSKV. Now you write down again, please. Some fields are missing there. After name, debit posting is equal to 1,000 rupees. Debit posting is equal to 1,000 rupees. Debit posting is equal to 1,000 rupees. Credit posting is also 1,000 rupees. Credit posting is also 1,000 rupees. Suppose if you want to specify the percentages, you can specify the percentages also. I'm not specifying any percentages. I'm specifying only whole amounts, absolute amounts. Click on save. Write down there. What is this blank tolerance group, right? Some space is there, right, below the step or here. Please write down. The blank tolerance groups. The blank tolerance groups are also called. The blank tolerance groups are also called null tolerance groups. NULL. Null tolerance groups. The values are the upper limits of the blank tolerance groups. The upper limits of the blank tolerance group is applicable to all the GL accounts. All the GL accounts which are not assigned with any tolerance group. Which are not assigned with any tolerance group. Means what? Say for example, right, in the company code, right? I've shown you the GL account, no? In another company code, SSPN, right? We did not assign any tolerance group. In the outstanding expense account, right? We did not assign any tolerance group. That means the values of the blank tolerance group. For the company code SSPN also, we have defined the blank tolerance group. And for the tolerance group, we have given the upper limit to 1,000 rupees, right? So in the case of GL account, outstanding expense account, we did not assign any tolerance group. That means these upper limits are applicable. Suppose, for example, in the outstanding expense account, there is a 750 rupees credit balance. In that case, that 750 rupees will be transferred to P&L account. But for that, again, we need to do some settings. Those settings we will see later on. Here you have to understand the concept of the tolerance groups. So with the help of the tolerance groups, right, the system can decide how to process the residual balances in the balance sheet GL accounts, like outstanding expense account, outstanding revenue accounts, prepaid expense account, incomes received in advance account, etc. etc. Clear? Now, the next topic is define tolerance groups for employees, right? So this topic again will take more than 40 minutes. This we will discuss in Monday class. Monday, we complete this basic settings, okay? Then I will send you the complete FI material, right? This is complete FI material, which contains 227 pages, okay? Then you take the printout of this material, 227 pages, and you copy the settings from the old material to this new material. Same settings. Till now we have done some 28 pages, right? So these 28 pages are also there here. It was copied actually, right? So you copy the settings from the old material to this new material, and you can discard the old material now. So after taking the printout of this material, right, then get it spiral bound, right? So while taking the printout of this material, right, ask your Xerox shop person to give the numbering, right? They enter the number, some setting they will do while printing, then the system will go on giving the number for every page. So once you take the printout of this material, right, get it spiral bound, copy the settings from the old material to new material, and you discard the old material. So from Monday onwards, from the Tuesday onwards, you have to keep the new material only with you, right? Once we complete FI, then we start CO, right? Before starting CO, I will send you the controlling material. Okay. So any questions from anybody in this today's class or in the from the previous classes? Okay, then see you on Monday. Good night and good day. And one more thing, just a minute. Saujanya.
Yeah, hi, sir.
Can you hear me?
Yeah.
Yeah. Do one thing. This is my mobile number. Just to give me, ping me on WhatsApp, right? 955-011, right? India.
Okay.
Right. This is my WhatsApp
Okay.
number. Please ping me on WhatsApp. Okay.
Okay.
Please write down this number 95508-14011.
Sir, Manjunath here. I have one more question. I have one question.
Yeah, tell me, Manju.
Sir, this tolerance group, creating the tolerance group, is it a mandatory setting or
Yes.
it is an
It's a
optional?
mandatory setting.
Okay.
And one more thing, all the settings what you have done till now, right?
Yeah.
Every
Yeah.
setting is a mandatory setting, except business areas.
Okay.
Okay, then see you on Monday. Good night and good day and happy weekend, everybody.